General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right, let's knock out this word. Sentiment. Well, do the dates first. The 9th through the 13th. 6, 9, 25, 6, 13. Really just this. Sentiments. Okay, bullish sentiment is coming back into the market. Let's do this. There we go. Cash on the side, it looks like it went up just a little bit. Bearishness is about the same. Bullishness increased. Well, no, it actually went down. This is pretty much a pause. So looking at the over week. We pretty much same place we were last week. Let's look at this. Board of Exchange. They long. This looks about even. Most of the open interest is in short. Let's put this in the chat. for VIX cut. The net short dealer. Net position appear to be short. Asset managers net long. Other reportables. So total in position is net short. Who is net bullish? Asset managers. Who's net bearish? The dealers. So this is like a hedging, latest position, removing non-reportables and unallocated net activists. We got short positions that are active still. Heavy deal, leverage fund short and speculators on usually leads to reversal or breakdown setup, especially in volatility. Volatility may decline, implying equities might rise short term. Price bias, reversal down or consolidation. Commercial net position strength. Dealers proximity for commercials of VIX holding a large net short. Historically extreme net shorts by commercials and VIX. Current commercial positioning strong. Potential setup for a big VIX drop. They're heavily short, small specs are long, commercials are short. Commercials and large specs on the same side, short VIX, while small traders are long. Market bias is bullish equities, VIX lower. Seasonality, VIX tends to rise in August, in October, and drop in May to July. We're in June. Near seasonal lows combined with commercials heavy short, large spec short. Use seasonality to trade VIX short setups now and exit before August. This is actually really good. The master class on the VIX. Mm-hmm. See to here, it's like commercials are long because we got more long contracts than shorts. Then we got non-commercials are short. Look how much they got long over here as far as open interest. And then the percent of open interest. This is the change of open interest here. It's so much in that little piece of information, knowing how to read it and just studying it. Let's go Forex Factory. That link to this GPT is in the Telegram channel. It ain't no yellow folders. I almost thought I didn't have yellow folders on. Okay. Go back here. CPI week. CPI kicks off Wednesday. So I'm thinking Wednesday midweek reversal. Since CPI is on Wednesday. CME Fed Watch. Okay, let's go here. Next meeting is the 18th, which is in a week. So third week of this month. 18th, 97% chance of no change. Yeah. After that is more interesting because this news is already locked in. So this round of news, this went up to 83%. NFP pushed this up. This was 74%. So NFP pushed up the probability that rates will hold in July 30th. Yeah, that was 74%. So it don't look like they finna cut no rates here no time soon. This is nothing top 10 for the NASDAQ. Not even, I mean, GameStop and Oracle, Adobe. Let me see if Oracle is even close to the top. I don't think so. I don't think Adobe is either. 11 is Costco. No. Yep, ad blocker stays on. Palantir is moving up crazy. Into it. Nope. Yeah, so nothing in the top 20 for NASDAQ. So I don't got to worry about no volatility. Double check Chewy, Oxford. Yeah, no big deals this week. Then the dollar. Hmm, I still think the dollar go up. CNFP was a bullish day for the dollar, but this volume imbalances still has my interest from that gap up. So I'm thinking higher before lower. I don't think we're just gonna fall. Monday, Tuesday push up, maybe Wednesday CPI push it down. I believe they're starting to show inflation numbers now on CPI, and it's actually been good data, but it's not helping the chance of rate cuts. And I'm still thinking higher before lower. Thing to watch with this is the closer the tax bill gets to passing. You have to watch the bond market. That bond market tax bill connection, it could be bad for the banks, which in turn bad for the economy. We look at the COT for NASDAQ. I personally think the tax cut is good, but people in the bond market have a way of making people lose money if things don't go their way, which won't necessarily affect just the average everyday working person, but big banks and stuff like that, you get to playing with their money, they'll get to making agreements. Get this NASDAQ COT. Put this in this Larry Williams thing. This is the NASDAQ. Total net positions. Non-commercials are net long. Commercials are net short. Non-reportables are net long. So unlike the VIX, which was net short, this is evening out perfectly. So who's net bullish? Non-commercials or speculators, which is us. Non-reportables, net long. Commercials are net or bearish. Latest positions, excluding the removed traders, they're still bearish overall. So active only commercials plus non-commercials. Okay, that's interesting. Price behavior expected from this positioning. Commercials heavily short versus specs and public loan. Historically, this leads to market weakness or a correction. However, commercials are often increased shorts during rallies, not always predictive of tops. No, that makes sense. Use this methodology. When commercials take usually large short positions, it's just they're hedging aggressively. Commercial shorts are 54% of the open interest. Large specs versus small traders. This divergence is a contrarian sales signal per Williams. Commercials oppose both groups. They're often a high probability top near term. Seasonality. Seasonality is kind of throwed off this year. It shows strength through late June and tends to pull back in July. Okay, we're still in June. We just started. So commercials could be setting up this month, just starting to buy for cheap. And then when we do have a pullback or something, they can make all that money back from selling these contracts, which makes sense. That's a longer term gain. Let's look at the monthly. Okay, we left this old range completely. We closed over this last month. Last week was only week one of the month. We already took previous month's high. So let me put this on the chart. Top of the previous month's high. And we put a body through this high. Not overthinking price action here. We closed above this with the body. We opened up, pushed down, pushed up. This is bullish. It don't make sense to sell this unless we get like a daily structure kind of confirming, okay, it's going to pull back. We don't have any earnings, but CPI could just scoot us right to all-time highs, not that far. Okay, my field of flow is bullish. Up week, CPI this week, we can clean up. That's how liquidity. Back here, I do want to see this. Previous month's high was previous week's high. We already tapped open price of this down candle. This fair swing liquidity at 22.020.25. It makes the most sense. Weekly is not showing any sign of weakness or any sign of stopping at any level. And we do have a volume imbalance right here. Close here, open there. So there's stuff to reach for, even though we got flat bottoms and it's all kind of gaps down here. This doesn't want to go there yet. The only way I think we can get there is if like a surprise or some type of event happens to where we just gap down and now we can start targeting that flat bottom as of right now. Thinking weekly objective to be 20.25. I don't think there is any weekend news that can cause us to gap up immediately. It's not really no good headlines. It's kind of just um, Trump versus Elon stuff. That's the hottest thing on the block right now. I don't know what that is. This gap down was interesting, but this fractal in itself just made sense. Accumulation, failure swing, and then we pushed up here. We're having trouble closing above these highs, but that's normal because you would get like not close, not closing. Then we get a push down. We just come back up and clean up these wicks. We have 3-bar swing high, but this is a weak swing high because it's made with the down candle. This looks like a low-hanging fruit objective for Monday. Down candles don't really make swing highs, they make swing lows. So that makes sense here. Turning this into an order block also makes sense. We left EQ of this range and pushed up. I'm not looking for no sales back to EQ of this range until we get something that creates a fair value gap. We created a bullish fair value gap, but we filled it completely. That shows you this delivery's been choppy. Like even this bullish fair value gap, we just cleaned it up. We're not respecting no fair value gap, really. We respected this one last. Touched it, never came back. This one, we just touch it again. Even this one, we just completely demolished everybody that tried to use this fair value gap that wanted to swing this long. But that's kind of typical for week 4, week 5 of those long months. Week 4 don't do nothing but try to make the wick. And week 5 is pretty much like a non-consistent week or the weekly cycles. Low hanging fruit would be swing high, down candle, 36.25, go to H4. Just new new week opening gap from last week. We don't have sales out here. So let me make this red. All this stuff will eventually have to get dealt with, so I'm gonna leave it on. This is another gap with a flat bottom. We never got sell side at this new week opening gap. That was the target from last week. We hit that. And look at this delivery, it's very slow. This breaker block held very nicely. That's down candle, push up. Well, it's really a mitigation block. Came all the way back. I don't see anything too interesting here either. We're not getting textbook order flow. We had a lot of wicks right here. We took out sell side, so this is accumulation manipulation. We can distribute up here. See if we offset and then start pushing down, that'll be interesting for 1 or 2 day setups to come take care of this regular trading hour gap that got completely left open and that new week opening gap that needs sell side delivery. We right here. Can we distribute of the highs? I prefer to sell above highs to target regular trading hour gap Friday for base hit setup. See, I don't have no news till Wednesday. Even the hour chart, just we're not really creating any good gaps. Order blocks maybe, but we came up to this order block and we didn't create a gap off of it when we came here to that mitigation block. We pushed down, not a very strong reaction. This is distortion. Look at all these wicks. It's just, it's not ideal trading conditions. I don't even think it was that many. It was NFP week for one, but NFP week usually has a bigger reaction. Like that's a small NFP week. I think they're getting ready for summertime too. Note the price action from last week. The flow was not ideal. There were no strong reactions on the higher time frame that created fair value gaps. Yeah, price moved, but it didn't move smooth at all. All right. Yep, that's it right there. Let me stop the recording. Stop it. How to do that? Hold on.